Thanks for joining our live broadcast today about some important updates to FATCA. I'm joined by attorney Anthony Parent, one of the founding partners here at Parent Parent LLP. We learned about some important FATCA updates that made us realize this is not going anywhere anytime soon.
It's one of those things where we've all been in denial. Mm-hmm. It's like, no, this horrible law is just too hard to implement. There's no way that all of these banks around the world, there's no way that the government could possibly get this horrible law implemented. It's just not going to work out. Something is going to give, right? That was sort of my impression of it. There's no possible way this will actually happen.
It did.
Quickly,
if people don't know the basics of FATCA, Foreign Account Tax Compliance Act, was passed into law March 2010. It's sort of slowly been rolling out. Now, bear in mind, this is a reporting requirement. It's not a tax. It's a federal law, requires all U.S. taxpayers to report their non-U.S. financial accounts yearly, including those living outside the U.S. And we say a lot, people get confused. If you're living in the UK, you don't think your money is it should be reported because it's not foreign.
Right, and especially if you're a UK citizen. It's certainly not foreign to you, so how could that go on a foreign disclosure?
Must be filed with your 1040 tax return. Extensions do apply. Congress, we think they were trying to find like all this hidden drug and terrorist money. Is that?
No, they had no idea what they were doing, basically. This was just a pipe dream of some law school professor that this would, create so much tax compliance. There would be all this revenue for government spending and whatever socialist utopia it would fund. And it's just, it's a pipe dream.
Yeah. Now, you have to report this on Form 8938. And yes, you still need to also report it on your FBAR.
Right, because they're completely separate laws. FATCA came from the Hire Act of 2010, and the FBAR came from the Bank Secrecy Act of 1970.
Okay. Now, Anthony, talk to me about penalties. What happens if you don't file?
If you don't file your 8938, you get a $10,000 penalty. And then another $10,000 penalty for each month the failure begins after 90 days that you're notified of it. So if you come under audit, really the only way you can be penalized if you are under audit and the IRS, hey, file this, and you don't. So the penalties can add up. What I look at the rather larger risk is that the failure to file your 8938 and any other forms that are required, like your Form 5471 for foreign corporations or 8621 for PFICs, is that your return, the statute of limitations on assessment doesn't run. So that's sort of the bigger risk because, usually it's 3 years or a substantial understatement, and substantial is in quotes because it's only now 25%. The IRS could come back if they really want to, if they have a bone to pick with you, they can come back and say, okay, well, we're going to go back 10 years. And with the sort of computerized documents, maybe in 1960, it would have been hard to get documents that were 10 years old. Maybe in 1980 it would have, maybe in 1990. But I'll tell you, certainly in 2016, it's not too hard to get something from 2006. And in 2010 or 2020, 2010 will be pretty easy to get. And so this is where, I don't think yesterday, but the previous day, we're explaining how interest really runs and that what did we have? Was it $15,000 in 1996? Would be over $50,000 today if the interest is running. And so when they go to assess, they go back to that date and then they bring it forward and all that interest. So for a small amount of understatement of tax, it just blows up out of control very quickly.
And now the audit doesn't just apply to Form 8938. It's everything, your 1040. So yeah, you're right. The penalties on the FBAR and then your 1040, you're looking at, you could potentially be over $100,000.
Sure.
Wow.
Yeah, it's not too hard, right? It's a small amount could blow up in your face, and there's really nothing you can do to waive interest. That takes an act of Congress. Now, there is another substantial understatement penalty of 40% on underpayments of tax attributable to things you didn't put on there. But to me, it's really that interest. But that understatement penalty goes on as well.
Yep.
And the interest is running on that. Right. So you have so let's just say you had an understatement of if you had an understatement of just $10,000 of tax. Okay, well, we're going to put another $4,000 on it. So now we're sort of at 14. So this is going to blow up, get huge.
Now, the other part of FATCA, and this is where some of the biggest updates are, we want to thank David Vaughn from Money International wrote a great article.
Yeah.
And
Absolutely.
you know, there's some stuff that went into effect July 1st. Now, FATCA requires all non-U.S. Financial institutions, they have to search their records for suspected U.S. persons, and they have to report their identities and assets to the Department of Treasury. It includes banks, investment houses, insurance firms, which some people don't know. They think it's just banks. It's not. Now, if the client is a tax resident in the U.S., that FFI has to provide a financial statement for any account with a balance of $50,000 at the year end, or if at any point during the year that account had more than $75,000. What we didn't realize is the rule for that is a little different for expats. The balance figures $200,000 instead of the $50,000. Information is then, they sort of do a cross-check to make sure you're reporting everything you should. And this, Anthony, talk about the updates, as of July 1st for the program for FFIs.
Well, the IRS is going to begin penalizing the foreign financial institutions. And the penalty is a withholding tax on 30% of U.S. source income. So the IRS will nab that. The issue, this is how the FATCA works for the non-U.S. banks. And, of course, a U.S. bank doesn't have to do it. They don't have the compliance costs. So it's a nice little way to benefit. There's always this sort of protectionism that goes on with most of the things in the tax code, how it benefits the U.S. financial sector and punishes those who invest overseas. And this is one example because of the FATCA, there's estimates, $2 billion a year. And I think there was a study that the compliance costs in Great Britain is just phenomenal per person. I saw something, and I just don't know if I believe it. It was just so high.
Yeah.
But I would believe it's high. And then it's compliance costs paid for by people who aren't U.S. persons. It's paid by everybody who is banking at that in that country. So it's
what I've seen too is some expats are having a hard time opening accounts in foreign countries.
Yeah,
They're like no Americans.
Right, and then when they find a bank that does, then they tell everybody, "Hey, here's one. Here's one to go with."
Yep.
And hopefully we'll have an update on that. Some of the banks around the country, we're trying to work on a list of where people can open up, where banks are okay taking U.S. persons. You have that horrible mark against you. So what's happening is these banks are doing due diligence. They have to do their due diligence to see who's a U.S. person. So they're going through to see addresses, bank accounts, wires involving the U.S. And when they're sending the FATCA letter, this is how it works. They send a FATCA letter to say, "Hey, dear account holder, it looks like you're a U.S. person. And if you don't fill out this W-9 and sign this form, we're going to tell the U.S. Treasury all about you."
Wow.
And so we've seen a lot of those letters. Those letters started trickling out. Was there in 2013? There might have been a few. 2014, we started seeing uptick. In 2015, they slowed down for 2016 right now. And one of the issues is I just kind of think about this is that the banks are going through their records. And sometimes you have an account that was open a long time ago, and sometimes the original account holder is no longer with us. The bank's sending out a notice to who? To what address? And I'm just thinking, my guess is 50% of these letters are not addressed to the right place, and they're going to an address that's not there. And so the person who's the actual account holder doesn't think anything of it. Well, no, I guess I'm safe from FATCA. I didn't get one of those FATCA letters, right? And so there's a lot of people who are going to be surprised.
Yeah, I think. Do you think we'll see an uptick now in letters because all these FFIs realize the penalties are now obviously in effect and huge? I mean, 30% of a withholding tax payable to the IRS and a possible ban from trading on the American money markets.
Then that's
huge.
That could be crippling.
Yeah.
That really could be crippling for a lot of them. And I think once it starts, the first ones start getting penalized, then everybody, even though they do seem, a lot of them do seem to be taking it pretty seriously. They are absolutely petrified of the IRS, just like everybody in the world should be. But I think that people who've been maybe should have received those letters, or banks will do a little bit more outreach. Maybe make a phone call to say, this account looks active. Why didn't this person respond to this FATCA letter? Because this is going to look bad. It looks like we're not doing our job. Now, if a taxpayer doesn't respond to the FATCA letter and the bank can say, "Hey, look, we did everything we could," the bank will be in the clear, but they're also going to be sending their information to the IRS. And it looks like this is really where, from what we're seeing, FATCA is leading to more offshore audits than the FBAR.
Mm-hmm.
And
Yes.
the reason why is because your FBAR is really in a different database.
Mm-hmm.
And that's information that you're self-reporting. So how would the IRS know a negative
Right.
of, hey, audit me because here's the things I'm not reporting?
Yeah.
That's not what it is. But now with FATCA, it works a lot better for the IRS because it's information they're getting from a third party.
Mm-hmm.
Oh, we found this from them. And now maybe they don't need, now can they assess FBAR penalties? Absolutely.
Oh, sure.
And now they have some really good evidence against you. Here's a FATCA letter that was sent that you didn't respond to. But by the way, FATCA letters don't mention FBAR. That is something that we see. So you see that, and you don't necessarily, the way the FATCA letters are, it doesn't necessarily mean you're willful in non-reporting your FBAR. So we have a lot of cases where people got the FATCA letters like, well, I can't use the Streamline program. I said, well, did you know about it? Like, no, I got this letter though. Well, read the letter. Tell me where it says about to report your FBARs. Oh, it doesn't.
Oh, wow.
Yeah, it doesn't.
Good
Yeah, none
point.
of them do. So I'm not telling banks to say that, but it is something.
It's a thing.
It's a thing. Well, or if you did tell people about the FBARs, then they would say, oh, what the heck's an FBAR?
Mm-hmm.
Oh, maybe I should file that. So or I should really, to the banks, mention the FBAR in your FATCA letter too. That would help people understand what action they need to take.
Yep. All right. Well, with these new updates, again, we know this program isn't going anywhere anytime soon. So if you need assistance, if you're concerned about any reporting requirements, don't hesitate to contact us, info@irsmedic.com. You can call us 888-727-8796. Any information you share is subject to the attorney-client privilege, as we are an actual law firm. You can subscribe and like our channel and comment below, and we'll get back to you. We want to thank you so much for watching the live update about FATCA. IRSMedic, the law offices of Parent Parent LLP, real tax attorneys for tough tax problems.